Hello everyone and welcome. Today, we're going to talk about the current situation, focusing on economics and the market. Well, everyone is aware that there's a virus which we call the novel coronavirus or also known as COVID-19. Itong virus na to ay kumakalat globally and has been affecting businesses, economies all over the world. But hindi natin kailangan magpanic. Well, hence, kailangan natin maging optimistic, and for us traders, there's definitely an advantage to it. So, tingnan natin kung anong epekto nito economically and for the financial markets. Economically, the virus has been slowing down and has been shutting down economies. Well, nagsimula to sa China end of last year. And lahat ng factories, lahat ng shipping, na-interrupt ang mga interruptions nila for days and weeks. Well, this is the time that we have to be very careful in terms of operational effects, in terms of manufacturing, industrial operations, and imports and exports. We just really don't know how huge of an impact this could mean to the global market. Well, the virus has been continually spreading all throughout Middle East, Europe, and the United States. Different social engagements, activities has been canceled, millions of people are affected, and well, it really has a big impact globally and with all the markets. Well, if we are all going to put all of these together, this will continue for days and weeks, but definitely the central banks and the governments are doing something, and it will definitely have a serious impact in the future. So with that said, let's take a look at how this affects the market. We have what we call the surge in volatility. And volatility is how fast the instruments move. So recently, we added VIX. Etong VIX na to ay nagme-measure ng volatility ng US indices at ng stocks, which are tradable platforms. Now, it usually was 13, and VIX is actually now trading at 54, and nag-multiply na to by times 4 in just a month. So, definitely, maganda to as an alternative para sa ating mga traders. So in this situation, there are things that we can actually consider, and here are the things that I'd like to share to you. Number one, we have volatility. Volatility is high and it will stay high for weeks. There will be upsides and downsides, and you can actually take it as an advantage. Number two, you have to model your exposure. So if you've been using 5 lots as a strategy for quite some time or before, you may want to consider 1 lot this time. There will be wider swings, so you have to reconsider your allocation. Number 3, trading will be very fast. This is good for day traders, and you can lock in profit on a very short time. Just don't leave any position open if you're planning to go somewhere else, and you have to consider being fast whenever you enter or you leave the market. Number 4, stop losses. There will be random movements and it will be wider. So you don't put the position too tight, but you have to put some space. And with that, you can actually move it on an above break-even scale, even if your trade goes positive. So you can lock in profit even if the market goes against you later. Number 5, there are different asset classes. We have the Japanese yen and Swiss franc, which strengthens when there are uncertainties. We also have the Australian, New Zealand, and Canadian dollars, commodity currencies, and suffers when metal and oil goes down. We have gold, which is related as a safe investment during such periods. And we have the emerging market currencies, which will be very volatile. And finally, long-term investors don't like volatility, so they will be absent for quite some time in the market, which means fewer bids in the market. So in essence, these are exceptional times for our traders, and you could use it as your own advantage, but definitely you should have a good plan or strategy. Well, good luck sa inyong lahat and hope everyone is safe.